Welcome back to Strongman Personal Finance. Oh yeah. We're going to talk about some more tax stuff today, ladies and gentlemen. Welcome back to my channel. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term Boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I'm not kidding when I'm seriously thinking about selling my Alibaba stock in my Robinhood account at a loss of $3,552 as of the filming of this video. So right now my cost basis in BABA, because I've averaged down, is $135, which I think is still a great price. However, Alibaba is now trading at $82.47. So you could say I've gotten my cheeks clapped a little bit. Now, if you look at the one-year returns of BABA, it's been viciously annihilated. Okay, not the fundamental business. Well, even that's been hurt a little bit by the Chinese government and the lockdowns. But the business has not fallen by 61% on a fundamental basis. However, the stock price has, and I actually see an opportunity here. Now, what I'm about to talk about, do not try this yourself, because if you screw it up, you're going to get your cheeks clapped. And I guarantee you probably will screw it up. So go get some freaking advice from a CPA. I'm not your CPA. I'm not. Unless you pay me lots of money, then I'll maybe be your CPA. But I'm not your freaking CPA. So looking at Alibaba, the first thing, and I was sitting there this morning, really early, and I was like, okay, I just took a tax loss harvest of my total international fund. I sold that at a $3,000 loss, and I put that into the Vanguard Total World Index Fund. Now, the reason I did that is, number one, I want a more diversified portfolio. My core philosophy is max your tax advantage accounts and buy total world index funds. Even by buying an international ETF, you're basically timing the market. But if you own the world at market cap weights, you ain't timing crap, and there's basically no room for error there. So I sold VXUS at a $3,000 loss and immediately invested that into VT. Now, you got to be careful, because if you buy a substantially identical security, you sell and then you buy. If you buy within 30 days, or if you have a sale at a loss within those 30 days before or after that buy, you trigger a wash sale. And basically what that means is you don't get to use that loss on your tax return. And I've explained in the other video, I actually had an example of Tesla my SLO Fufu my Pupu stock. If you trigger a wash sale by basically buying and selling the same security, the loss gets added to the cost basis of the security that you bought. So you don't get to use the loss at the current time. At some point in the future you can. It's not lost forever, but you can't use it for this year. So be very careful with wash sales. Now, what am I going to wash Alibaba with? I mean, look at this, $3,500. Now, I am salivating thinking of that tax deduction. Because when you go and you do your taxes, this is the tax form. I know, boring. Tell me 10x stock, strong man. If you look on here, lines 1 through 6 are all income. Wages, interest, dividends. Dividends, by the way, they're taxable. You don't want dividends. IRA distributions, pensions, and Social Security. The next line is capital gain or loss. Yes, you get taxed on capital gains. If you sell a stock at a gain, you get a capital gains distribution from your mutual fund. That shows up here on line 7 of your 1040. However, if you have a bunch of gains, but you have more losses, you net them out, you have a net loss. And what you can do is, there's a rule in the tax code that says you can reduce up to $3,000 from your ordinary income on your tax return. So what you want to do is find your net loss for the year and then say, okay, what is my tax bracket? Multiply that loss by your tax bracket. That's potentially the savings you can that's potentially the savings you could generate on your tax return. Of course, go actually sit down and actually have with a professional that is actually understand your current situation, and they can tell you exactly how much you could potentially save. But according to my estimates, since I'm in the 22% tax bracket, if I have a $3,000 loss, I can save myself $660 of federal income taxes every freaking year that I have a loss. It's pretty freaking good. So I've already generated this first loss with my sale of VXUS into VT. Now, will I get the whole 3,000? Probably not, because I'm going to have some capital gains. I actually sold HPQ for a profit of like 17%. And I'm probably going to have capital gains distributions from my taxable investments, my VT-WAX and my total, Target Retirement 2060 fund, all in Vanguard. I got a pretty decent amount of money. So I'm going to get a tax bill for those. So I'm not going to get the $3,000. However, if I sold BABA and didn't generate a wash, I could have a $6,000 loss. Now, keep in mind, the max you can take every year, let's say you net everything out. Let's say you have $6,000 in losses and $3,000 in gains. This is simplifying it. You have a net loss of $3,000. Now, you could use that all in that year, which you will. But let's say you had a $10,000 loss and you had a $5,000 gain. You net those out, you have a net loss of $5,000. The most you can use is $3,000 every year. And what you don't use gets carried forward indefinitely. So on your next year's tax return, you can actually apply that $2,000 you didn't use against capital gains in the future. So it's a great benefit. So even if you don't use it in the current year, you can get the benefit at some point in your life. And this is pretty massive tax savings. Now, my thoughts and what I'm considering doing, I haven't made the decision yet because I'm a little paranoid, and this kind of goes against a lot of what I do, but I think I have a pretty good idea or thought process behind this. I want to find stocks that are highly correlated with Alibaba, because what I don't want to do is sell Alibaba and then buy some other stock, and as soon as I sell it, Alibaba rockets up massively. Because my whole plan is I'm going to sell out of Alibaba, generate that $3,500 loss, and then I'm going to buy another stock and hold it for 31, 32, 33 days just to be safe. And I'm going to sell that stock and buy back into Alibaba. Because if you are outside that 30-day window, make sure you consult with your advisor to make sure you don't screw it up. If you buy back in after the wash sale window closes, you don't have a wash sale. Now, like I said, the risk is I sell Alibaba, $3,000 loss. And I want BABA long term. I think it's a great stock. And then I go ahead and I invest that in another stock. Now, in the meantime, BABA rockets up massively. Something happens in China and BABA goes up 100%. Well, if I want to buy back into BABA, now I got to pay a ton of money more than my original cost basis. Does that make sense? So it's a big risk. Now, to mitigate that risk, you want to find companies that are correlated with BABA. So my initial thought process is, I said, okay, what companies are trading massively undervalued, on a financial metrics, and are highly correlated with a Chinese large cap tech stock, basically? Well, JD, another Chinese stock, and Tencent. Because if you look at them, and I've actually charted the performance of these stocks over the last year, they're pretty decently correlated. You can see they plunge and then they shoot up. And it kind of makes sense. It looks like JD's a lot more volatile than BABA and Tencent. I've noticed that with JD. It's like freaking up 10%, down 10%. So it's very, 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 it has a lot of fluctuations. But these are all large cap Chinese stocks that have been freaking wrecked recently. So if I was to buy a stock after selling BABA, it would probably be one of these because they're correlated. If BABA goes up, let's say I sell BABA, BABA rockets up, but then I bought JD. Well, if good news comes out about China, well, JD is probably going to go up too because it's another Chinese large cap tech stock. They move not in lockstep. You can see they're not perfectly correlated, but there's some correlation there. They go up and they go down roughly the same amount, give or take. So that's kind of my thought process. And if I do that, well, I already have $3,000 from that wash sale, or not a wash sale, $3,000 from selling VXUS. And then I'm going to have $6,000, if I sell this right now, I'm going to have $6,500. So at that point, holy crap. Now that's a massive tax savings, either now or in the future, especially if my tax bracket increases at some point. And then what if the stocks crash even more? So I generate this sale with BABA, wash sale. Then I jump over to JD. JD also goes down with BABA because they're highly correlated. I generate a loss from JD and I buy back into BABA again. I could be stacking up my losses massively. Now, like I said, do not just watch this video and go do this. And I'm not even sure I'm going to do this. But my thought process is, hey, why not? If I can harvest these losses, why not freaking do it? So that's kind of what I'm mulling in my head. You can leave in the comments if you think this is a stupid idea or not, because the last thing I want to do is sell Baba, buy JD or Tencent, and then Baba rockets up and the other two stay flat. Because then, holy crap, if I want to buy back into Baba, I got to pay a lot more money. So there is some risk, but there's also some reward. So that's kind of my thoughts. Let me know what you think. Have a wonderful day. Cheers!